In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a major milestone for Apple, becoming the first U.S.-based company with a market value of $1 trillion. We will map out how we got here and have reaction from veteran Apple analyst Gene Munster. Plus, Sonos launches its IPO, but is this the right move for the smart speaker company as competition from Apple and Amazon closes in? We'll speak to the CEO and an early investor. And Strava, the social network for athletes, has 32 million users and growing. We'll speak to the CEO about its popularity rise and concerns about security. But first to our top story. Just last week, it looked like the tech sector was in for a massacre this earnings quarter thanks to a disastrous showing by Facebook. But then came Apple. The iPhone giant surged this week following its earnings report as much as 9%. And then Thursday, it happened. $1 trillion. Apple became the first U.S. publicly traded company to cross that milestone. Just how did it get there? Bloomberg's Mark Gurman has the answer.
After months of waiting, it finally happened. Apple has become the first U.S. publicly traded company to hit a $1 trillion valuation, leaving the likes of Amazon, Alphabet, and Microsoft in its wake, but not far behind. Apple's milestone is significant and a testament to the rapid growth spurred by the success of products like the iPhone and iPad, as well as CEO Tim Cook's leadership after taking over for visionary co-founder Steve Jobs in 2011.
And we are calling it iPhone.
But let's not forget that what's now the world's most valuable company was on the brink of bankruptcy as recently as the late 1990s. That was until co-founder Steve Jobs returned to the fold. Since then, it was one success after another. And in the 7 years since Jobs' death, Cook has steered Apple to new heights by launching key new devices like the Apple Watch, iPhone X, and the AirPods. He's also pushed the company deeper into new services like Apple Music, which is now a key revenue driver. And Cook and his team aren't stopping there. They're keeping Apple on the technological edge, delving into self-driving cars, augmented reality, and healthcare. What does he think of Apple's latest milestone? Cook told Bloomberg in an interview, quote, "I don't really think about it. That's the truth. I still view Apple as a pretty small company, the way that we operate. I know it's not numerically, but the way we function is very much like that, to be honest." And to grow beyond $1 trillion, Apple has to keep churning out cutting-edge smartphones while still finding its next big hit and growing the digital services business. A larger version of the iPhone X and a cheaper model with many of the X's features are on the way. Beyond that, AR could revolutionize personal computing once again, while a big online video push is coming soon to an Apple screen near you.
1T here to tell us more. The voice you just heard, Bloomberg Tech's Mark Gurman. And in London, we have Bloomberg's Caroline Hyde. And with us in Minnesota, Loop Ventures managing partner, Gene Munster. Gene, I'll start with you, given that you have covered this company for years. What does this actually mean?
Well, I think it means that that Apple has become really the fabric of our lives. I think it's just testimony to that this is something that we don't even think about how much we rely on Apple's devices, and that means that I think that's one piece of it. I think it also means that the company is so big right now, it has an unfair advantage over a lot of other companies, just given its market cap, the stock that it has. If they ever did want to acquire companies, they've got more leverage on that. And last is, I think it is a wonderful reminder to people to stick to doing one or two things exceptionally well. In Apple's case, it's always really been one thing exceptionally well. And Tim Cook got a lot of heat over the years for not going down in the phone, coming out with a cheaper phone in a mass market. And he got distracted or criticism for not doing M&A, but he stuck to what he believed in. And I think that was kind of the third piece that I take away from hitting this milestone.
I do have this chart here in my GTV library showing Apple at the top, but trailed by Amazon, Alphabet, Microsoft, all in a sort of a pack, rising behind Apple. You know, Mark, you also make the point in your story that Tim Cook has had a lot of successes, even though he's also caught a lot of flack for not being Steve Jobs.
Right, and this is no accident. If you remember when Tim Cook took over as CEO back in the fall of 2011, there was so much talk. Is he going to be able to steer the company to new heights? Is he going to be able to do more than stabilize it? And at the same time, there was a lot of talk, is he going to let this company go? Is it going to become like the company it became under John Sculley and under past CEOs who replaced Steve Jobs originally? And the answer was a resounding no. This is at a market cap that's 3x what it was when Steve Jobs passed away. And that's just a number, but the number is still representative of this historical marker that represents so many new products over the years, smaller products, the Apple Watch, etc.
Now, you point out in your story that Apple isn't the first company to hit $1 trillion market cap. In fact, it was PetroChina, which quickly fell as oil prices fell. Caroline, you've been digging into some of the other historical markers here, and having the highest market cap isn't necessarily a recipe for success.
It's certainly not. Just cast your mind back to Microsoft, a key tech player that back in '99 hit that $500 billion mark, the $500 million. And, well, it then had 4 successive years of downward trajectory. It languished at then the number 300 almost in terms of market capitalization. It doesn't always spell that this is going to be a winning streak for the company. You mentioned PetroChina. Well, because oil prices crashed, it swiftly fell off its perch as well. So I think it doesn't always spell glory, but I think what's going to be taken into account when it comes to Apple is not only is it ahead of the pack when it comes to the other in excess of $500 billion value companies. So it's about $100 billion worth more valuable than Amazon. It's well ahead of Microsoft and the like, and Alphabet. But also its price to earnings is still pretty darn reasonable. It's the lowest of those 4 killer tech companies. It trades at about 18 times future earnings. When you compare that to Amazon that's nipping at its heels, it trades at more than 100 times future earnings. This is a company that's already raking in $250 billion in terms of revenue every single year. It makes money. No wonder its valuation is so high.
Jane, what are the risks for Apple here? Is there any risk that Apple does hit this mark and then fall back down, given all the challenges ahead, even though it is still relatively cheap compared to its tech peers?
So there's no immediate risk, and that always concerns me when I can't identify an immediate term risk, but I don't see any immediate term over the next 1 to 2 years. There probably over the next 5 to 10 years is going to be the emergence of wearables, and this idea that it's an augmented reality first. It's something that Apple believes strongly in, but that's going to be a shift in terms of the devices that people are going to use. And so the good news for investors is we have a clean sailing ahead for the next several years, but the risk is kind of down the road relative to what can happen when we have the next hardware shift. And would remind people that's one thing that Apple has done brilliantly well, is this idea of embracing the innovator's dilemma. And what that means is when they've had successful products, 2005, the iPod was just over 50% of revenue. They were very aggressive at creating a new product to cannibalize that, with the iPhone in this case. In the future, Apple is going to have to cannibalize the iPhone, and that is going to present some sort of a risk to the story.
Well, Mark, wearables were up 60% in the last quarter in terms of revenue, but is it going to be the Apple Watch or AirPods that cannibalize the iPhone? Probably not.
That's absolutely right. And to your point, no, it's not going to be the AirPods or the Apple Watch. It's going to be another product that, as Gene alluded to, that's going to be augmented reality glasses. That is Apple's next big thing.
How big can that be?
Yeah, and we declared that as Apple's next big thing about 2 years ago. And this is really what Tim Cook is banking the future of the company on, to some respect, in terms of hardware. The company has well over 1,000 engineers working on this right now. They're working on an augmented reality headset that is designed to eventually succeed the iPhone. It will take some of the, the heat away from the Apple Watch not doing as well as some may have expected earlier on. This is their next big product.
Gene, are you as optimistic about AR as Mark is here?
Yeah, Mark's done a wonderful job of covering the topic, and I wholeheartedly agree that this is kind of the next thing in terms of the mobile device, but it's going to be a long time away. I'm very optimistic about Apple's business over the next several years. I just want to emphasize that piece because their hardware business, the iPhone business, is operating almost like a services business. But kind of putting it all together and answering your question, Emily, is that I share Mark's optimism about the future impact that augmented reality will have on consumers.
And Caroline, it's not just products that have led to this run-up, it's also share buybacks, correct?
Certainly when it comes to the share price. I mean, there's a fascinating chart that we can show on the GTV library that really highlights how much the ramp up in share price has been driven by buybacks. They've brought back phenomenal quantities of shares, billions spent since they first announced those buyback intentions. And actually, when you do all the math, you can see that basically 42% of the share ramp up is actually because of these share buybacks. Now, that doesn't mean that the market capitalization is driven by that, because of course, when you buy back shares, there are less there to times by the price of them, and so therefore you in some way halt your market capitalization, but also you drive up your overall price of each and individual share, particularly when you're baking in the earnings that they've been managing to have. So it's a bit of a complex realization as to market cap, but certainly the share price ramp up, well, that's been a lot to do with buybacks, not just innovation.
All right, Bloomberg's Caroline Hyde for us in London, Loop Ventures, Gene Munster and Mark Gurman of Bloomberg Tech. As always, we are going to be talking about this a lot. Thank you all. All right, shares of Square have nearly doubled this year, putting pressure on the company to outperform. I sat down with Square CFO Sarah Friar to talk about the latest results.
We want to invest, but also do it with financial discipline. So we actually maintained our guidance for the full year, so 240 to 250 million of adjusted EBITDA. So that actually stayed the same. That's, if you look at the back half of the year, that's 3 points of margin expansion. So we think that's the right balance of invest to grow, but do it with financial discipline.
More of that conversation ahead. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. When it comes to Square, investors expect a lot. Shares have doubled this year after a 154% gain last year, and that means pressure to outperform analyst expectations for earnings this week when Square reported. Instead, investors got strong revenue momentum, but a weaker than expected forecast as the company's spending on new products and growth tempered profit. But there's much more to Square. CEO Jack Dorsey made a push earlier this year into Bitcoin, which has helped that boost. Bitcoin trading has helped fuel growth for the Square app in general. We caught up with Square CFO Sarah Friar and asked what other coins the company would be looking to include on the platform.
We went with Bitcoin because we felt it was the battle-tested form of crypto. It's been around for the longest period of time. I think people feel confident in it. If there's a need, we'll always go with what our customers are telling us they want. Right now, I think there are other needs on that platform, and that's why, in some ways, we've done more investment around things like loyalty programs, rewards programs, and I think you'll see us do more on that. And then the second thing we've done with cash is take it to the UK. Yeah. So I think there's actually a need for all of these same utility pieces on a global platform.
As a CFO, does it make you nervous? I mean, given the volatility, does Bitcoin and crypto make you nervous? So others have pulled back, right? Stripe started allowing it, and then they stopped because of the volatility.
Yeah, it goes back to what you're allowing. I think as a tender type or as a payment type, it's still very early, but it certainly behooves us to be there. What would make me more nervous, frankly, is if Square wasn't experimenting and iterating with new technologies, because that is our future. And so by offering Bitcoin, we had to do a lot of work under the hood to make sure we understood how to manage it and manage it safely. We've always been great at risk, right? That was the first thing that really got us going as a platform. Now, risk is not a destination. It's a journey. The bad guys are always getting better and better, so you have to keep up your game on it. But I think it's the reason why we've built, a payments platform at the scale that we have. It's why we've been able to do products like instant deposit. I said yesterday on the call, moving money quickly is somewhat difficult, but many folks can figure out how to do that. What's really hard is moving money quickly at scale. And we did $4 billion of instant deposits in Q2. So you really have to make sure you're managing risk well.
So if the price materially drops in the process of that transaction, where does that leave Square? I mean, and who's handling your Bitcoin custody?
So that's one of the reasons why we've set up the program the way we have, that effectively you make a purchase on Cash App and we really quickly go out into the market in order to consummate that purchase for you, and then we hold the Bitcoin for you, but it is your Bitcoin. So effectively the risk on Square's balance sheet is really de minimis. It's in the hundreds of thousands of dollars, really on purpose, because ultimately we want to make sure that we put the risk in the right place with the, in terms of managing what the customer wants to do.
So this is a question we're asking all of our guests right now. What is the biggest downside risk to your industry and your business in the second half of the year?
Right now, business is good. Right? We just grew 60% year over year. I spend a lot of time looking at macro data points and trying to figure out what's going on from an economic standpoint. And what I see out there is, small business optimism is at an all-time high. The tools that we're bringing them are helping their businesses grow. That's our whole value proposition. And so right now, from a macro standpoint, I think things are actually quite benign.
How about the Trump trade war, tariffs? I mean, is that concerning small business owners or any of your customers? They're not all small.
Yeah, no, they aren't, and it's a great point you make that we are now really serving sellers of all sizes. And in fact, as we have launched more and more APIs on the platform, we're bringing on sellers that are actually quite large at this point. I mean, at the end of the day, I think people are focused on what can I do to make my business grow, and not spending too much time focused on, what's the noise that's coming across the transom from DC.
So then what's the biggest upside trend?
So it's where we're focused. So omni-channel is a massive unlock, right? If you're starting to see small businesses meet customers in online ways, food is often not talked about as omni-channel, but for example, with Caviar, we can make sure that you can meet the customer who walks into your full-service restaurant, but if they're sitting on their couch and want to make an order, you also get to take that sale as well. So omni-channel is massive. I think there's a lot in this financial services for individuals. Like, we know that there are 25 million households in the United States that are unbanked or underbanked. They haven't come on the system, probably because something like a debit account is really expensive for them. And so I think by rethinking what an account looks like and rethinking the economics of that, I think we can actually bring individuals on in the same way that we did originally with sellers.
I do think there's an undertold story about how Square is sort of democratizing access to financial services, essentially.
Yeah, it's exactly right. Our purpose is economic empowerment, and I think this is a mega driver. People forget about greenfield. They want to always go directly to who are you going to compete with and who are you going to steal share from. And if you look at the US, you still have 21 million small businesses who don't accept cards. So effectively, we know, folks like you, when you go out to shop, right, you've got your card, you often don't have cash. They're missing a sale. It's just a mega trend going on. And so I think people miss that a lot when they think about the Square story.
Looking forward, what do you think about the competition, whether it's PayPal or Venmo or Apple Pay or some of the less obvious or less discussed competitors? What do you think the biggest threat is?
What I love about our business is it's a cohesive ecosystem. And so we don't put it to, for example, the business to have to stitch together all of the different pieces, right? Instead, we say, come on Square and we'll help you always make the sale. We'll give you a really robust point of sale system. We'll do payroll for you. We'll give you access to capital. We'll help you do loyalty and marketing. And so they don't have to think about working with multiple other vendors. Similarly, if you think about competitors, you mentioned Apple Pay. It's not a competitor. Apple Pay is a form of payment. So I can take my card and swipe it, I can dip it, or I can put that card into my phone in a wallet, and I can use Apple Pay or Samsung Pay or Android Pay. And so for us, it's about how do we make sure that that shift to contactless continues to work even for the smallest of businesses. And by the way, we love that shift because a contactless payment is safer, it's faster, and we know that people spend more when they're using a credit card.
Our conversation with Square CFO, Sarah Friar. Coming up, how safe is Mark Zuckerberg? We'll take a look at just how much security the Facebook CEO really needs. This is Bloomberg. Zuckerberg's spot in the limelight comes at a cost, $7.33 million to be exact. That is how much Facebook spent last year protecting its CEO at his homes and during his tour across the United States. And last week, the company said it would up personal security spending an additional $10 million for Zuckerberg. Is this appropriate for a tech CEO? Here to discuss, Bloomberg Anders Mellon. And Anders, you've got a chart in your story that shows that Zuckerberg gets the most for personal security than any other public company CEO. Why so much?
Well, there's probably a couple of different reasons. For one, he leads a company that is one of the world's biggest and most well known. He's extremely rich himself, and he is, compared with many other CEOs, he's fairly open with his private life. He posts pictures from his family and travels on his Facebook account. And the company has been in a little bit of hot water this spring with regards to its privacy policy and potentially how the platform was used in the run-up to the US 2016 election. All of that kind of adds up to creating a risk profile for him that security experts say might warrant these high costs.
Sheryl Sandberg also pretty high up there, $2 million and change on personal security. How much do you think this increase has to do with what's been happening with Cambridge Analytica, Russia, controversies in Myanmar, and information that was posted on Facebook that many say has led to violence?
It could definitely have an impact. Because if a company gets bad press, then typically it's executives that, especially if they tend to be public, they can be targeted for threats. We saw that in the aftermath of the financial crisis when many banks started upping their security, when Herbalife was targeted by Bill Ackman. Herbalife also equipped its CEO with more security. But then there could also be solely personal reasons for this. Mark Zuckerberg now has 2 young kids. He got his second daughter last year. It could be that he just wants to up his security for his little family. It could be that perhaps relatives or extended family members have gotten threats and are just not feeling that comfortable. So, and then it could fall on him to pick up the bill for that.
And you go into great detail about what these costs actually are, right down to bulletproof windows.
Yeah,
tell us where the money is spent.
Yeah, it's quite interesting. I had conversations with a lot of people that work in the private security industry, and because going into the story, I figured that an additional 10 million on top of the between 5 and 7 million that Facebook has paid a year for the past few years for Mark, that seems like a lot of money. And I was quickly told that that's actually not necessarily that much when you have private security detail, when you have security at your home, you have a special cybersecurity program set up for your devices. Costs can add up very quickly.
Much more. All right, Bloomberg's Anders Mellon, thanks so much for that story. Still ahead, seems like selling consumers on cool tech gear just proved easier than convincing investors of it. Details on Sonos' stumble to the public market next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Shares of wireless speaker maker Sonos began trading Thursday on the NASDAQ after an underwhelming initial public offering. The company priced shares below the marketed range and raised $208 million. That gives Sonos a market value of about $1.5 billion. In April, the company was hoping for a valuation twice that. Our Bloomberg IPO reporter Alex Barwinka caught up with Sonos CEO Patrick Spence after shares started trading.
The quick reaction is always, they make these great sounding, great looking speakers, and so they're a hardware company. And so we did have to spend a lot of time helping investors understand that we're a totally different type of company that build products that last for a long period of time, and people come back and buy more of those products. And so we are unconventional in that sense. As far as I know, in consumer electronics, we're the only company that approaches it the way that we do. And so certainly some of that education was necessary as we went through it. And so I think there's that element of it of course.
And Patrick, when I talk to Sonos owners, they do love the product, but we all know a product does not a good business make. When you do talk about that narrative that you're pushing out to the street, where's the growth going to come from? Is it convincing folks to upgrade to new systems, new speakers? Is it the platform itself? Where do you see that growth in the future?
Yeah, so we've really, in this first phase, we've really been successful in breaking into the traditional home audio market, people that were looking for stereo systems in their home. What I'm most excited about, and what our investors got excited about, was the fact that there's 176 million people around the world that are now paying for streaming music. They're paying $120 a year. They love music so much. It's $149 to start with Sonos. And what our job is right now in this second phase is to really get the people that have all that great music from Spotify, Apple Music, Pandora, you name it, on their phone, and get them listening to it out loud at home. And that's exactly where we come in because of our open platform supporting all those services. And so that is really what we're talking about in this kind of next phase of Sonos and what I'm most excited about.
Patrick, on the roadshow, you talked a lot about the opportunity that voice-activated speakers brings, and we, definitely pair Amazon's Alexa with the next age of voice-activated speakers. But Amazon is a partner. They're also a company that tends to strike fear into other technology companies. How do you manage that relationship going forward if they decide to push in more into the wireless speaker space?
We've managed the relationships with Amazon, Apple, and Google for over a decade. They've put their music services on our platform. We work very closely with them, respect all those companies. We have put Alexa on the platform, as you mentioned. Google Assistant will come later this year. It's been beneficial for both sides in terms of them being able to get their services into our 7 million homes and us being able to offer that voice control of the music experience. So, based on our experience to date in our last decade of history, I expect that all of our partners will continue to want to bring their latest and greatest service to Sonos, and we'll bring that into millions of additional homes, and it'll be beneficial for both sides.
Looking forward to the latter half of the year, you are a public company now, and some of the macro trends will undoubtedly impact how your stock trades, whether it's tech earnings from the broader group or political tensions with the likes of China. What are the biggest risks for your business in the second half of 2018 when you look forward?
Well, I think I really feel, after 20 years in the tech space, I really feel it's much more about what you're doing and executing in your own business. Obviously, I realize, and I'm realistic in watching things around the tariffs and things like that, but it's much more where we are right now in the market with a huge opportunity in front of us. I'm much more focused in how we execute the products we need to bring to market, the new countries we're opening, and really attaching to all those people that are paying for streaming music. And so I feel like at our size and scale, some of those macro trends we'll watch and be mindful of, but it's also the opportunity ahead is so big and we're so early in the game that a lot of those I think we can maneuver around.
Sonos CEO Patrick Spence there with our Bloomberg IPO reporter Alex Barinka. Sticking with Sonos, we're joined now by Mike Volpe, general partner at Index Ventures, one of the largest holders of Sonos. So, Mike, lots of people love Sonos products. Venture capitalist Fred Wilson wrote basically a love letter to Sonos this morning, but investors weren't so excited about it. Where's the mismatch?
Well, Emily, thanks for having me on again. And thanks, Fred, for the wonderful love letter that he sent us. Look, I think the storyline around Sonos is an uncommon one. As you know, there haven't been a lot of consumer hardware companies that have excited investors as of the recent past, at least. But Sonos is one of those things where you can't judge the book by its cover, because if you look underneath Sonos, the way that consumers use this hardware product is very, very different than traditional companies. The average household has 2.8 Sonoses per household, and 93% of Sonoses that have been sold since 2005 are still in operation in people's homes. That's a very different kind of a product than sort of a traditional consumer hardware product. And a lot of the process this last couple of weeks has been about educating investors, investors in the broader market than just VCs like us, on why it is that Sonos is such a special product. And I think that, today there's 7 million homes that have Sonos. As we continue to deploy more and more of it, I think you'll see investors begin to appreciate the value proposition of this company and understand that it's more than just a speaker maker.
But what about the competition? Amazon with Alexa and Echo, Apple with the HomePod, Google Home, and all of those things do more than just play music.
Yeah, I like to think of those as co-opetition, fundamentally. All of those services, whether it's Alexa or the Google Assistant or AirPlay, do run on Sonos as well. And Sonos fundamentally gives consumers the choice. And that's the beauty of the product. Just as in the early days of streaming, you could get Pandora or Spotify or Rhapsody or anything on Sonos. On Sonos today, you can get Alexa and Google and AirPlay and so forth. And so in some sense, we accommodate that sort of union of all of those benefits. The fact is that even for those companies, at the end of the day, it's useful to have a company like Sonos that sells music systems throughout the home, because essentially it enhances the exposure that a software offering like Alexa has. And so fundamentally, even though there is obviously some degree of competition at the margin, overall, I think both parties, all three companies as well as Sonos, benefit from the overall partnerships.
Mike, you've had 6 recent liquidity events for Index. Adyen, the IPO, Dropbox's IPO, iZettle, Zuora, today Sonos, and also today Cisco announcing it's buying Duo Security for $2.35 billion, which Index also invested in. Not bad.
Yeah, it's been a good year. We're very thankful for it. It wasn't always this way. As you know, we had very humble beginnings at Index just a few years ago when we opened up our San Francisco office, and we've come a long ways from that. But I think fundamentally, in betting in companies that maybe sometimes are a little bit contrarian, like Sonos, for example, I think we've begun to find our stride. And not every year is going to look like this year, but as a team, we're very humbled by all the work that these entrepreneurs do, and we're thankful that we've gotten here.
So what does the future hold? I mean, do you see as many opportunities for investment? Do you see more opportunity in the public markets with Uber and Airbnb coming in the next few years?
Look, I think this is an exciting time in the venture investing business for a variety of reasons. For one, the landscape is changing. We're seeing an influx of capital come into our industry from the likes of Sequoia raising large growth funds or SoftBank. We're seeing new names show up in a business that historically in venture was mostly dominated by a small number of well-known brands, and I think firms like ours are opening up the space a little more. And at the same time, investing is becoming more global. You're finding companies in Europe like Adyen, one of ours that did incredibly well, or Spotify in Europe, and you're seeing a rise of China, and you're seeing cities like Los Angeles and New York start to create terrific venture opportunities. So I'm very optimistic. The public markets are always tricky. You just never know how they're going to behave. Even this week, as we went through the roadshow of Sonos, it was a tricky week. It was not the easiest week to take a company public. So those ebb and flow. But broadly speaking, the spirit of entrepreneurialism and the value proposition of what venture companies can do continues to grow. So, you can never predict the short term, but over the long term, we're very, very optimistic about what we see in the tech landscape in the future.
All right, Mike Volpe of Index Ventures, 6 liquidity events of late.
Thank you.
Coming up, a startup that claims it can extend the life of fruits and vegetables just closed a $70 million funding round led by one of the largest hedge funds in the world. We'll ask Appeal's CEO how they got the attention of investors and what the tech angle is next. This is Bloomberg. One of the world's biggest hedge funds is joining the fight to keep avocados ripe for a longer period of time before they go bad. Viking Global Investors led a $70 million funding round in startup Appeal Sciences. The company claims it can treat avocados with a solution to stay ripe twice as long as its usual shelf life. For more, we're joined by James Rogers, CEO of Appeal Sciences. So, as you were coming on, I realized I probably get rid of 1 avocado a week that's gone bad, they can't use. How does this actually work?
Yeah, so we use food to preserve food. We make plant-based formulations that are applied to the surface of fresh produce, which extends their shelf life, even when they're sitting on the grocery store shelf or on your counter at home.
So what's the science behind it? Why does food help?
Yeah, most people don't think about it, but when you harvest a piece of fruit, it's still a living, breathing thing. And so by creating these little barriers on the outside of produce, we're able to get a little microclimate and optimize a little microclimate inside that fruit, which makes it stay longer, both on the grocery store shelf shelf and sitting at your home.
So you're backed now by a hedge fund, Gates, Andreessen Horowitz. What are they so excited about?
This is a big problem. Estimates in the U.S. somewhere between 1/3 and 1/2 of what we're growing is ultimately ending up in a landfill. Globally, this is supposed to be a $2.6 trillion issue, and so we literally have money evaporating off of store shelves, and this technology really addresses that.
So what else can this be used for? I mean, we're looking at video here of other fruits and vegetables.
Yeah, every single piece of produce on the planet spoils by the same mechanisms. It's water evaporating out of the produce and oxygen getting in. So this barrier that we've developed allows us to control the rate that those things happen and give you better quality, more nutritious, longer lasting fresh produce that you're less likely to throw away.
So you're saying it can be used on anything?
Yeah.
So what makes this proprietary? Why couldn't someone just copy what you do or copy your formula?
Yeah, there's a lot that goes into it. Really at the core of what we're doing is we're using food to preserve food. And that means that we're using plant material in order to create these formulations. And there's a lot that goes into this. It's really about understanding, again, going back to this element that fresh produce is a living, breathing thing. You really need to understand both the produce and then you need to understand the science that goes into creating that little microclimate for the fruit.
Now, as Amazon pushes into grocery, many different chains pushing into online grocery and delivery, there's obviously an increasing importance for things to be fresh. And one of the things that I encountered using Amazon Fresh was a lot of the produce wasn't fresh by the time I received it, and I had to throw it away.
Yeah.
So, talk to us about the potential here given other technological shifts happening.
It's a big challenge. You hear often that the interior of the store is dying today because a lot of this is going to online delivery. Folks don't need to go to the grocery store and buy their paper towels. But the fresh perimeter, that part of the store is really growing and evolving quite a bit. And that there's a war that's actually happening right now at retail, which is it doesn't matter which grocery store you go to maybe go pick up your paper towels, but if you know that you can get your favorite produce at a particular grocer, you're gonna go elect to go to that store instead.
How many suppliers are actually using this?
We have a handful of suppliers that are installed today that are servicing both Harps and Costco programs. We'll be making some more announcements coming up here shortly.
What is the competition using? I mean, if they're not using your formula, what's on my avocado?
The competition is the way that things have been done, for the last 100 years in this supply chain. A supply chain in these situations actually built up around this intrinsic idea that the produce is going to spoil at a certain rate. And what we've realized is that using this formulation, we can slow down the rate that fruit is spoiling, and so you can actually reconfigure your supply chain differently, and that results in all kinds of value creation opportunities.
I know you see potential internationally in Africa specifically. What do you see there?
Yeah, I mean, again, going back to loss numbers in the United States, estimates being somewhere between 1/3 and 1/2 what we're growing, ending in a landfill. In developing nations, places like Sub-Saharan Africa, Southeast Asia, those numbers can be 80 to 90% of what you're growing. And if you look at the difference, why such dramatic losses, it all comes down to not having the cold chain infrastructure installed in these regions to support the supply chain necessary in order to get fresh produce from where it's grown to where it's consumed. And our technology works without the use of refrigeration. It works without the need to install cold chain infrastructure. And so we're extremely excited by the opportunity to deliver this technology to places of the world that aren't fortunate enough to have the type of cold chain infrastructure that we have here.
How profitable do you think this technology can be? How do you make money?
Food waste is a $2.6 trillion problem. Making any significant dent in that is a really, really good business.
All right, James Rogers, CEO of Appeal. Thank you so much for joining us. Coming up, can social media make you an athlete? One company sure seems to think so. Our chat with the CEO of the fitness tracking app Strava is next. This is Bloomberg. It may be the only Airbnb that you can see from space, and it could be yours for a night. That's right, the Great Wall of China is a possible Airbnb destination for a sleepover on the Great Wall. The promotion is with the Beijing Development Committee, and a few people will be chosen to spend the night there. just one catch. You have to write an essay about why it's more important now than ever to break down barriers and build new connections. And one more rule about this listing, winners have to make sure they keep their music to respectable volume so as not to disturb the ancient wall guards. Well, fitness tracking means big business. In fact, according to Allied Market Research, the market could hit $62 billion by 2023, up from $18 billion in 2016. And Strava is the social media app that wants to get you moving and wants to make sure you're safe when you do it. The fitness tracking app claims 32 million athletes in its community, just released its newest 3-tiered membership service called Summit. Besides its training and analytics modules, they've included one called Safety that helps athletes stay in contact with a friend who can track you in real time and make sure you haven't veered too far off course. Here to tell us more, Strava CEO James Quarles. And you're saying now that, 1 million new users are joining every 30 days? What's the motivation here? I mean, do you believe that just being part of a social network can turn you into an athlete, can make you fit?
Yeah, so you said it, 32 million members globally, 82% outside the United States. So this is very much a global phenomenon. And I think when we hear social network for athletes, people wonder, what does that mean? And, sport has always been social, right? People hold you accountable. They get you out of bed in the morning. They push you to go a little bit further, whether you're racing or you're just, recovering from injury. And so that's, I think, what Strava embodies for people around the world. If you want to track your runs, your swims, your rides, it's the place to share it with people and get encouraged to do so.
Now, the app is really popular among certain kinds of athletes, like cyclists, for example. Who else?
Yeah, cyclists, runners, swimmers. I swim, I run with Strava. I also use it for my hiking. I use it for my skiing. We have up to 32 different sport types that you can record, and increasingly indoor. So we have partnerships with studios that are doing indoor cycling. Also, we have apps who do yoga that you can all have count back on your Strava feed.
Now, we've had you on the show in the past when this was just, almost more of an idea. Where are you now when it comes to actually making money?
Yeah, so we're not profitable yet, but we do, as you talked about today, we're announcing our upgrade to our subscriptions business. It's called Summit, and we're breaking it into 3 packs. We've raised $70 million to date. We are really focused on growing the community. The size of the community is probably our primary metric, and I think over time, it really, as we have such an engaged community of athletes, that's our mission, is to create the most engaged community athletes in the world. And
it's going to be driven by subscriptions.
Subscriptions business, I think it creates the opportunity for us to also have the potential for a content business, a sponsorship business, and potentially licensing.
You helped build Instagram's business. You also had leadership roles at Facebook. What do you think of the idea of, and I know it's not just a social network, but niche social networks and the potential there? I mean, where else are you seeing that work?
Yeah, I certainly think that the pendulum is swinging away from big, large networks to things that are much qualified, like ours. If you're active, if you're committed to sweating, you should be asking questions about which device to own, what shoes to buy for a race, which bike you love, of people who also share that passion. Those questions I don't think fit on Twitter or Facebook. They're much better suited to ours. And yeah, I do think if you see the rise of groups and messaging services, there's probably a Strava for food. There's probably a Strava for pets. These niche networks, I think, will become more popular over time.
Do you think there's going to be a longer-term backlash against Facebook as a result? That's everything that's going on, in addition to what you just talked about.
Well, look, I think your last guest highlighted the need that people are paying more attention to what goes into their food. Mm-hmm. And I think people are paying more attention to how the data that they share with these apps is being used. And I think it's a good thing. I think we need to give more transparency to people about, does this company sell my information to third parties, which Strava doesn't do? Do these apps background track when I'm not using them, when the app is closed? That's not something that Strava does. I think consumers would benefit from more transparency, and frankly, we're trying to lead that effort.
So what do you do with the data? We talked to a startup yesterday called an investor in Naked Labs, which has a 3D body scanner, but actually the data stays on the scanner. So how do you collect the data, and where does it go?
Yeah, so our data, people come, again, to track. So if they track from a device, we partner with over 380 different kinds of devices can read and write to Strava. So if you have an Apple Watch, a Garmin, a Fitbit, a Suunto, a Polar, they can all write to and read to Strava. That data usually is used for people, and that's why the subscription service makes so much sense, in order to analyze their performance. So you mentioned the safety feature, and I think that's a great one. So not only is if you're running or riding someplace unfamiliar, if you're on a race and your spouse or significant other is wondering where to find you, if you're commuting and they want to know what time you're coming home. I think these are all great instances of using that data, but primarily people use the information to analyze their own performance. So that's largely the use cases that we use. We do have a business where we partner with city planners to make better bike and pedestrian infrastructure, and I think our community loves this ability. If they opt in to contribute to that kind of better commuting, safer biking, we want to support that because it ties to our mission.
All right, James Quarles, Strava CEO. Thank you so much for stopping by. Well, we began by talking about Apple's historic day, and that is how we are ending. Yes, Apple became the first U.S. publicly traded company to cross the vaunted $1 trillion threshold. But ironically, being first isn't what Apple is all about, so says Tim Cook. This is what he told me last June.
For us, it's not about being first, it's about being the best and giving the user an experience that delights them every time. And so we don't let that impatience result in shipping something that's just not great.
Well, for this time at least, Apple was indeed the first. And that does it for this edition of Bloomberg Technology. I'm Emily Chang. We will be back tomorrow. This is Bloomberg.